The charts in front of you is the weekly S&P 500 going back to 1995. As you can see, the market made higher highs and higher lows, forming a resistance level around the 1550 mark. However, the market, that was as you know, the bubble, the IT bubble bursting. If you look at this level, the market started forming a head and shoulder pattern and started heading down. The market started going down all the way until 2003, where it found a level of support around the 775 mark and started heading back up. The market kind of made a triple bottom at that level. Now if we move to 2007, we can once again see the head and shoulder pattern being formed at that 1550 area. This seems to be the upper range of this of the S&P 500. As the market started making lower lows and lower highs, it's found support again around the 750 area before starting to head back up. The current swing on the weekly is a downswing, which is at 1440 for the A and 839 for the B. Once again, if we look closely here, the market came along and hit the 127 of this large swing, where it found a natural level of support before the market headed up. It formed a bullish engulfing candlestick pattern. This is what's known as a natural level of resistance. It's very important to note that, and it's very significant when the actual once a B has been formed and the retracement is much less than a 382, the market has a tendency to start to hit the 1.27, then start going back inside the AB boundary. If we go to the daily chart from March 2009, as you can see, the market has been making higher highs and higher lows. If we zoom back out again, let's see. It's important to note here, once again, that there's a clear head and shoulders pattern. That's the head, the left shoulder is here, and the right shoulder is there. Now let's go back to the swing. Using Fibonacci swings, we have a subswing, the A at 869 and the B at 1080, with a pullback which is less than the 382, and the market is currently at the 1.27 level. The market is still in an uptrend since it's making higher highs and higher lows. What's important to note here is that there's a confluence or convergence of the subswing 1.27 level and the 50% retracement level of the major downswing. There's also a confluence where you have the 1.61 extension level aligns with a 618 retracement level, as well as the past level of resistance becoming support. That's at the 1200 mark. Now the S&P 500 is a very important index to look at because it has the top 500 stocks in the US and has a large number of sectors which are included in it, and is a better reflection of the market than the Dow Jones Industrial Average. Hi viewers, thanks for joining me on my first broadcast. Please stay tuned. I will be bringing some stock picks later on in the week. I would also, welcome any questions that you want to ask me. You can always send emails to info@trademastery.co.uk, and I will try to answer any queries for you. So good luck in your investments.